Meanwhile, as widely anticipated, the Bank of Korea has announced intentions to hold steady its benchmark interest rate, taking into account external risk factors. Our Ahn Sung-jin reports.
South Korea has once again kept its benchmark interest rate at 2.5%. That's according to the BOK's Monetary Policy Board on Friday, as it decided to keep the rate unchanged for the 7th consecutive month, following a unanimous decision among board members. The current rate level follows a 0.25 percentage point cut in May last year, when the benchmark rate was lowered from 2.75% to 2.50%. The decision comes amid heightened geopolitical uncertainty in the Middle East, signaling a cautious wait-and-see approach.
The conflict is increasing both upside risks to inflation and downside risks to growth, while significantly amplifying volatility in financial and foreign exchange markets. We will continue to closely monitor how the situation unfolds and assess its broader impact.
Consumer prices, driven largely by surging oil costs, have climbed above the central bank's 2% target, with the policy board expecting an inflation rise to the mid to upper 2% range. The board also added that this year's anticipated economic growth would fall below 2% as the Korean won has weakened significantly, with the exchange rate recently rising to around 1,520 won per US dollar. Experts say rising global oil prices and pressure on the currency continue to increase uncertainty in the Korean economy.
The BOK's decision to keep the policy rate unchanged at 2.5% is actually widely expected when considering the current macroeconomic environment. On the one hand, inflationary pressures remain as CPI inflation rate recently came in at about 2.2%, which is slightly above the BOK's target, and there are clear upside risks due to rising oil prices.
The first policy meeting held since the Middle East conflict was also Governor Lee Chang-yong's final rate-setting session, whose term ends on the 20th. Ahn Sung-jin, Arirang News.